Yeah, hi everyone. Look, my name's Peter Marshall. I'm one of the directors of Colliers International on the residential side of the business. My focus is on our Queensland business. I've worked in the real estate industry in Australia for about 25 years now, and most of that time has been spent focusing on Queensland. Yeah, hopefully I've got a pretty good understanding of that market. So I'm just going to go through with you today just a bit of an overview of the Australian market, where we're up to with that, the significance of that market to Australia, um, and then with a bit of focus on the Queensland market specifically at the end. There is a lot of detail in some of these slides, so very happy to pass Brian and the team a copy of those slides to share with you at a later stage if that's appropriate. So really, first of all, this slide's really just to highlight the size and significance of the Australian residential property market. It's 4 times the value of the Australian Stock Exchange. Over half of Australians' wealth is actually held in housing. So it's absolutely critical to the Australian economy and to Australians' lives. It's a $500 billion a year industry. Again, there's a lot on this slide, but really what it does is it just highlights that in every capital city, we're not building enough new property to meet the demand. This is particularly focused on 2024, the market in that year, but just as a highlight and to really highlight the shortfall, if we look at Brisbane specifically, the population in 2024 grew by some 73,000 people, but we only completed 1,000 new apartments. So there's a huge shortfall, and that's reflected across every capital city in Australia. And really, this one, again, focusing on each of the capital cities, but it's really reflecting the imbalance that you're seeing. We're seeing price growth and rental yield in most of the capital cities. Again, during the 2024 year, which is where we have the most recent full-year data, especially that was in Brisbane and Perth. We've actually, in Brisbane, again, year on year, 15% increase in unit prices, nearly 10% increase in house prices. And I think really worth highlighting the low vacancy rates, less than a 1% vacancy rate on rental property. So there really is a critical shortage of rental property available, which is why we're seeing such strong rental yield growth as well year on year. So we're really seeing four key drivers for price growth in Australia. Population growth. We've seen a really significant increase in construction costs, a shortage of supply, and I'll have a look at each of those in a bit more detail. And then the fourth point, we're now seeing falling interest rates and increasing affordability. So property is becoming more affordable again for more people in the local Australian market, and that's only going to fuel the increased local demand. I'm no economist, so I'm not going to talk in any detail on that last point, but suffice to say, we are seeing interest rates falling. We've had 3 interest rate reductions this year, and we're anticipating more next year. So moving into the population side of things, I think it's really important to understand both the history or the historical performance as well as the future forecasts. If we look at that top graph, you can see that Australia has been really consistent with population growth over the 10 years up to COVID, around 2020, with around 350 to 400,000 people, or the population growing by that number year in, year out. We had a dip as during the COVID period, but then subsequent to that, the last couple of years, we've seen really, really strong population growth, over 2% a year. And that is reflected again across all states in Australia. I think the other point that's worth pointing out is whilst a significant amount of that is overseas migration, we are, unlike most other parts of the Western world, we're actually seeing a strong natural population growth too in Australia, over 100,000 a year natural population growth. So combined with that overseas migration, if we move on to that second graph, you can see the forecasts are going back to that 350 to 400,000 a year population growth over the next 10 years. That's the forecast. So consistently growing demand year in, year out. And that's obviously going to be reflected into the demand for new property. With regards to construction costs, again, we've seen a really significant increase over the last 5 years. And, particularly with the effects of COVID, and I'm sure that's also been reflected in construction cost increases in Singapore. Really, that was initially very much about a shortage of materials, but that's now largely stabilised. But our costs are continuing to increase because of a shortage of tradespeople now. But a really significant shortage of tradespeople across Australia, but particularly in Brisbane, Gold Coast, that southeast Queensland area, where we're seeing a competition really between the huge infrastructure spend, especially government infrastructure, and residential developers who are trying to really utilise the same tradespeople. And there's just a huge shortage. And just that point at the bottom, this was a report from the Master Builders Association of Australia just last week, highlighting there's a critical shortage of some 200,000 tradespeople currently in Australia. And that's both significantly impacting and will prolong the housing shortage we're seeing here. And it will also complicate the Olympic preparation because there's a huge amount of infrastructure that's going to be delivered as a result of that. This is sorry, let me just go back on that. Apologies, get back on this. Okay, looking at the dwelling and apartment supply, this first graph, just without going into huge detail, that line at the top of that first graph is the national target for new dwellings in Australia. And the lines that you see, the zigzag line underneath, that is just highlighting over the last really 25 years, we've consistently underdelivered in dwellings against the target that the government has set. That's year in, year out. Most years, that's 100,000 plus shortage. And if you remember that shortage is cumulative, we don't start fresh each year. Every single year, we start from a worse position because of that shortfall. And just looking onto the second graph, again, it really is showing that shortfall. This one highlights the apartment completions. And again, it just highlights the massive shortfall that we've had in apartment dwellings. The apartments is a really critical piece for the Australian market. We've seen a lot of urban sprawl as more and more houses are being built and cities become larger and larger. As a nation, we can't afford for that to continue. We need to increase density in the key urban hubs and in the city centres. It's just we're a huge country. We've got loads of space, but that urban sprawl, the cost of infrastructure, transport, water, etc., as well as it being in many cases a fairly inhospitable climate as you move further away from the coast. We really can't afford that. So the focus from a national government perspective, as well as each individual state government, is about delivering an increase in density. That means an increase, both a need for an increased supply and also an increased demand for apartments. And look, I won't linger on this one, but again, that's just highlighting how we are failing in each of these key cities. So we've got Sydney, Melbourne, and Brisbane here. We are failing to deliver the required number of apartments, and in particular, you can see how the numbers have fallen off in all of those cities quite dramatically since 2018. And if you remember back to a previous graph, even in 2018, we were failing to deliver the targeted number. And you can see, if we take Brisbane again as an example, just how dramatic that fall is and how much we're failing to deliver the supply to meet demand. So that's just giving you a bit of an overview on the Australian market overall, just highlighting that really everywhere we're seeing a shortage of supply, increasing demand year after year, populations growing strongly. But against that background, we're seeing construction costs continue to rise, which is going to push prices up further and further. And as demand increases and supply just isn't there. But now just to spend a little bit of time focusing on Queensland. As you can see from that map, it's geographically, it's a huge state, one of Australia's largest states. But actually, really, in terms of our focus and most of the residential property growth focus, it's very much on southeast Queensland, which is this little area here, comprises of the Gold Coast and Sunshine Coast, and with Brisbane as the hub. That area accounts for around 3/4 of the state population. So in that little area around Brisbane, Gold Coast, Sunshine Coast, 3/4 of the population live of Queensland. And that's very much our focus in terms of delivering apartments. So looking back over the last sort of 20 years, Queensland's been the fastest growing state on the East Coast. Had a population growth of 43%, over 1.7 million people. That population growth has been consistent. It's been also a mix of overseas migration, but has very much also been driven by interstate migration. So where people are moving into Queensland from Victoria, from New South Wales. As you can see from this bottom graph, the majority of that population movement has been into Queensland, some into WA, but year in, year out, the annual interstate population movement has been heavily into Queensland, and that southeast Queensland area in particular. I think the other thing that's just worth highlighting, particularly with that interstate migration, is the changing demographics that we've seen over the last 10 years. Probably prior to the last 5 years, it was very much people moving to Queensland chasing cheaper property prices. That has drastically changed in the last 5 years. Obviously, our property is no longer cheap because, as you've seen, there's been some big price increases. But it's really now, when you look at who's moving into Queensland, it's being driven by professionals and business owners who are chasing better business opportunity as well as a better lifestyle. And as somebody that lives in Sydney, spends a lot of time in Melbourne as well, I can tell you that Queensland really does have the best work-life balance. And that is a big driver for people, particularly now it's so easy to work remotely. So much is done online. It's very easy to travel. If you need to get to other states, you just jump on a plane and you're there in an hour. So it's far more easy for professional people, for business people who see Queensland as their best business opportunity anyway, but it's very easy for them to base themselves now in southeast Queensland, have the benefits of a more relaxed lifestyle, a more outdoor lifestyle, better weather, um, and still work from home and have that lifestyle focus. Now, this one's a bit of a complicated graph, so um, I won't go into too much detail on this, but really it just highlights that consistently, year in, year out, since 2016, we have consistently failed to deliver the number of dwellings needed in southeast Queensland to meet the population growth. Over the forecast is over the last 10 years, we've undersupplied this market by some 87,500 dwellings, so nearly 90,000 dwellings shortfall in 10 years. And that is obviously a major driver of the fact that the prices has continued to increase in southeast Queensland. You just can't with any product. If demand is outweighing supply, you're going to see price increases. And everything we've looked at so far has been sort of historic with regards to Queensland. But if we look forward at the forecasts, we're projected to see a further 1.7 million population growth in the next 20 years, so another 30% increase over the significant growth we've already seen. We're seeing a massive capital investment by the state government, some $117 billion worth of infrastructure and capital investment over the next 4 years. That's doubled from the previous budget. So, and is not reflected anywhere else in the country, that level of investment. And that 117 billion is spent across driving the economy and productivity, and which will inevitably reflect in further population growth. And that spends across road, rail, health, education, and of course housing. But we also have, as you may be aware, the Olympics now in Brisbane 2032. And whilst I say it's in Brisbane, it's actually being spread across that southeast Queensland area, so encompassing Sunshine Coast and the Gold Coast too. But we're really seeing over $7 billion specifically related to the Olympics in terms of investment, both the state and the federal government. Now, whilst we're talking about southeast Queensland, the focus very much does remain, the core of that is still Brisbane. And as we look forward, over 60% of that population growth that's forecast for Queensland will be in on or around metropolitan Brisbane. It's seen the strongest capital growth, price growth over the last 5 years, some 12% per annum in the last 5 years, as you can see from that little table in the bottom right-hand corner. And with well over 1 million people expected to move to Brisbane over the next 10 years, we are certainly forecasting and anticipating that price growth to continue strongly. And as I mentioned, I'm not going to go in huge detail about the Olympics, but we're basically now, we have a very clear plan the state government has recently introduced in terms of delivering the Olympics in 2032. And we're seeing some massive numbers here that'll result from that Olympic investment. 90,000 new jobs, over 7 billion in venues and infrastructure specific to the Olympics. Huge increase in international tourists, and the expenditure that they bring is just huge. And those recent property price growths forecasts are really quite staggering. If there was a report produced just last week by Urbis, which is one of the most reputable research companies in Australia, and they're forecasting now property price growth in southeast Queensland of 8% per year in the run-up to the Olympics in 2032. And then for the 5 years after the Olympics, so 2032 onwards for 5 years, 13% price growth per year. So if you are looking at this as an investment and a place to invest, I think you'd struggle to find anywhere else in Australia that is forecasting that sort of price growth. I certainly haven't seen it anywhere else where we're looking at that consistent price growth really over the next 10 to 15 years. And just final thing, just to show you, this is really just consolidates that Urbis report. And this is what they call a property clock, and it's produced each month by a company called Heron Todd White, which is one of the largest and most respected valuation and advisory companies in Australia. And they produce this monthly property clock to show where in the market cycle, whether the market's rising, falling, it's at its peak, etc., for each of the main cities in Australia. And so I say, just reinforcing that last Urbis report, they put both Brisbane and the Gold Coast right in the rising market, which is exactly where you want to be as a new buyer or as an investor. Whereas some other cities, Melbourne, etc., they don't see the same level of strength in the market, and they don't see the same level of price growth forecast. So I'd certainly agree that Brisbane is no longer, or the Gold Coast is no longer the cheapest place in Australia to buy, but there is nowhere that is forecasting stronger price growth over the next 10, 15 years than this Southeast Queensland market. So really, that's all I wanted to cover today. As I've said, I'll leave Brian and the team with this presentation, so please feel free to ask them any more questions. Thank you.